Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, August the 1st. The year is 2022. Let's talk trading. Reasons to focus on money with Walmal. These videos are for educational purposes only. Your results may differ from mine. Last week, on a phone conversation, Walmal and I were talking about focusing on the money. Remember that conversation, Walmal?
I do remember it. Yeah, I was pretty animated on that conversation, if I recall correctly. Not in a bad way, just I'm kind of opinionated on it, I guess.
Right. So maybe you want to tell the boys, girls, and non-binary traders out there about your fixation on the money.
Well, you know, a lot of traders, and if it works for you, keep on doing it. I'm never going to tell somebody not to do something that's working.
Right.
But that just, I want to go and put that little caveat out there, or disclaimer out there right away. Well, a lot of traders like to go and trade based off of, the number of pips, the moves. That's when they get out. They put their stop loss, at certain places, they'll put it, below a certain line, which is not necessarily a bad thing to do. If you see that there's a, support line out there or resistance line out there, and that price has trouble getting to the other side of it, that's where they'll put their stop and they'll trade in the opposite direction of that. And that's all fine and good. And I don't have a problem with anybody doing that. It's just that didn't work very well for me. Basically what would happen for me was that for whatever reason, I was just thinking pips, and it just didn't sink in that, hey, pips are dollars. And so I was having problems with that. So what I did was I changed it around a little bit, and I said, okay, if I'm having trouble with that, I know something that does really makes a difference in my pocket, and that's dollars. Because if I don't have dollars in my pocket, I can't go buy bread so I can have lunch this afternoon. So it just has a much more higher impact in the way I think. Now, that can be good, and it can also be bad, because it can also lead into, I'll do the bad side first. The bad side of that is that it can put you in a situation where you're always nervous, you're always afraid, and you got this fear thing that you got to overcome, and may even prevent you from getting into trades, and may prevent you from getting out of trades, and it can cause all types of problems that way for you. So if you know that that's your challenge for you, well, maybe this may not work for you. But for me, it made things a lot more real, because it was real dollars on the line, and it just made it very, very clear for me to go and do it this way. So what do I do? Well, what I do is I say, okay, I'm allowed to go and lose X dollars on any particular trade, and I'm allowed to lose Y dollars for the day, period. Okay? And don't violate it. And be very, very strong with that. And that's really my rule for money management. That's my rule. And so let's say my rule is that I'm allowed to lose $100 on a trade, and I'm allowed to lose $200 for the day. I appropriately set my lot size, okay, and I go and just trade that way. Just say I'm just not going to do it. And in fact, I was talking to you earlier today, Kiera, where I came within probably 80% of where I was going to go and, excuse my language, but crap out for the day. I came real close, and it turned out I had my finger on the close button to go and exit the trade, and just going to do that and say that's my limit. That's where I'm getting out, and that's just all I'm going to do. And I would have walked away for the day. And you said that's, it's a losing day. I don't have very many of them, thank goodness. But you're just going to have days like that. Nobody's a perfect trader. Nobody's going to trade and win every single day. That's just, if you think you can, I've got a bridge to sell you, and it's because it's just not going to happen. And so for me, it just, I got to put things, and I say this all the time in here, I got to make things simple. For me, everything's got to be simple. And, I like to say that I'm a simple guy, like I have simple concepts. and simple rules. And by doing that, trying to keep things as simple as possible, to me tends to work out much, much better. And yeah, there are days where, you wind up underwater. Sure, that's life, and you just move on from that. But because having those simple rules and abiding by those simple rules, you don't get to the point where you're in trouble. And that's the key to everything, is making sure you don't, bust out your account.
Yeah, yeah. For me, the one thing I do slightly different is I also look at the return percentage wise on the account. So if you've known me, say for since the early 2000s, when I used to have the Pal Talk trading room, it was called the 2% Club back when I used to trade stocks. I'm just focused. If I can make 2% a day on a consistent basis, I'm going to do okay. 2% gain. And you can ramp up small accounts, pretty quickly doing that. And quickly, what I say quickly, I'm talking about over a year.
Oh yeah, yeah, and that is quickly, because if you think about it, you're making 2% a day, okay, not even compounding that, but just 2% a day, and let's say you have 200 trading days a year, that's 800%. That means you've taken your account and you've grown it 8 times. And we're not even talking about the possibilities of compounding. If you include compounding, then I don't even want to think about what that could be. It's tremendously higher than that. So, that's yeah, and 2% is not an unrealistic number. It really isn't. Generally speaking, my goal is actually about 1% a day. It used to be closer to 3%, but I've scaled it back now to 1% because I've grown my account size where I don't need it to be that high anymore. But, the thing is, 2% is completely doable. I had 1% and I was done within 2 hours of trading today, and so you put in a 4-hour or 5-hour day, you can easily get 2%. Now, of course, there are going to be days where you're going to have negative days, and that's part of the game. That's okay.
Yeah, because I guess part of that is knowing when to say, okay, I've made X for the day and I'm done. It's
Right.
so easy to get, to keep trading, and then all of a sudden you get in a position where you're down and you want it back, and then next thing you know, you walk out with what we used to call elephant ears, empty pockets.
Yeah, and that's the thing. That's why I've got that limit for a particular trade and a limit for a day, because the thing is, what happens is if you go and lose a trade, you can say, okay, no big deal. You lose a second trade, and it maxes out your account for what you're allowing yourself to lose that day, or what you think is big money, whatever it is. If you really think that you're going to come in on the third trade and be ready and fit to go and take it, I think you're sadly mistaken. Okay, because what generally happens is that if it goes in your direction, you're going to become greedy, and you're going to be sorry for going greedy. Or the other thing that's going to happen is you're just going to go and take any trade along the way and want to take not necessarily your trade. You're going to be trading what you think you see as opposed to what is actually occurring, and that's the problem. And that was always my problem, where if I take a couple losses in a row, and now instead of just being down a little bit down, allow myself to lose on any particular trade, I'm now down quote unquote a big a lot, and next thing you know, what I would do is, if I got into a good trade and it was my direction and I could have eaten into that loss a little bit, I wasn't willing to take the little bit to go and eat into it. I wanted to get it all back.
Right.
And more times than not, I'm now getting out flat again. I'm getting out, we're making nothing, and I've accomplished nothing, and then I'm even more upset. Or the other thing that happens is it goes against you, because markets don't go in your direction all the time. They go both ways, The next thing you know, now you're more than what you were willing to lose for the day. You do that on a continual basis, you don't have that account left.
Right. And the other thing is, a lot of people who count the pips, but this is something that when I first started trading Forex, it's like, pips, what are you guys talking about? And then what happens is you put on a trade, and then you average in or you stack in, and then you exit. And then a lot of times, say maybe on average you were up 10 pips each position. Somebody goes, well, I just made 20 pips. It's like, how'd you make 20 pips? The market only moved 10. You
Right.
know? And so it's one of the things with dollars, it doesn't matter. Like in stocks, doesn't matter how many, times you add in. When you exit, you're only talking about dollars.
That's the only thing you care about is the dollars. At the end of the day, you can't spend pips. You can't buy a loaf of bread with a pip.
Yeah.
Dollars on the other hand, you can. Well, maybe you still can. I don't know with inflation now.
Yeah, plus I think, there's a couple ways to look at it too. Is the money that you're making, is it to grow your account? That's one. Is it to pay your monthly expenses? That's a whole separate thing. And I
Oh
think
yeah.
that traders may or may not be clear what they're doing. And I'm sitting here looking at price thinking, oh man, it's just coming out of that launch pad again.
Yeah, that would have been a nice little trade there. But you're exactly right, Tierra, because the thing is, the way I always did it when I was first trying to grow my account, luckily I had enough money in savings I could live off my savings for a while. Because I anticipated going and doing this. It was my goal to go and do this. So I was building up my savings the hard way through the job, building up enough of an account that I had enough of an account where I could live off of it for a while I went full time into this. But what I did was once I got into doing this and I started actually making a profit consistently, well, what I did was, it's sort of like your basic, finances that you teach your kids when they're young. 10% goes into savings, 10% goes into, long-term savings, 10% goes into, fun entertainment things, and of course 20% goes into taxes, and you break up your account that way, and that way it's just consistently you do that, and by doing that you always got money going back into your account.
20% goes into taxes. What country are you living in?
Well, I'm just looking at federal taxes in the U.S. with capital gains,
Oh,
being
okay.
at 20% right now.
Okay.
But but by doing that, it's just. And also, funny story is that when I gave my kids an allowance, they got an allowance for doing things around the house, and then they got taxed, so they learned about taxes when they were only 7 or 8 years old. That's a funny aside. But at the same time, you got to go and just build. You got to build a business plan, and that's what it all comes down to, is building a business plan. Because without a business plan, it's just not going to work out. We talk about having a trading plan. You also need to have a business plan. How am I going to, once I get money into the account and money starts coming into the account, how am I going to go and break that up? And some people say, well, that'll be easy once the money starts coming along. Problem is, a lot of times what happens is money starts coming in and people don't do that. They wind up spending everything that they made, and next thing you know, they're not growing their account. You got to be consistently growing your account at all times. And you may say, why? If I got $1 million account, why do I need to grow the account anymore? Well, here's the reality. You may have $1 million account, but you may want to get to the point where at some point you don't want to have to trade as heavy. You don't want the pressure of trading heavy. Okay, that's the first thing. The second thing is we're going through it right now across the entire world. With, like right now, they came out over the last week where the real inflation rate in the United States is over 9.5%. Well, that means that to make the same amount of money that you made last year, your account size needs to be 10% higher than it was last year. All those things, you got to keep those things in mind. You got to look at this purely as a business adventure. This is, unless of course, the other way of looking, of course, is this a hobby? You have to answer the question: is this a hobby, or is this a business? And I think we're out of time, sir. We're real close to it.
Yeah, we are. We are definitely in that last minute of the fastest 15 minutes in trading. So, fellow traders, I hope you got something out of that, and we'll probably continue that discussion on this week. So remember, when you're sitting down at your trading terminal, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.